Mike, the news that Bloomberg broke yesterday is that U.S. tariffs on copper imports would be coming within several weeks before a conclusion that was going to take like 270 days. Can we just do like a primer here? When we say copper imports, are we talking like the stuff that comes out of the ground? Are we talking like refined things? Are we talking like copper wires? Do we have an idea yet of what that looks like?
Well, for me, it's the refined copper, Alex. The U.S. imports about 50%. It's one of the few commodities that we have a deficit of. Obviously, it's spiking up. But what you mentioned is still, it hasn't happened yet. Market's anticipating up to 25% tariffs. And the price, the CME U.S. traded copper has jumped to about 20% premium versus the LME traded copper. So it's already priced in, and we still haven't had it. And I think we're at the point where the market, the Trump administration is going to realize, okay, yeah, we need to kind of reduce inflation, increase American productivity, American onshoring production to U.S. And if we spike the price of copper too much, that's not going to help our goals. So I'm kind of worried now that copper is at that huge premium. It's the highest price ever. And so I'll give you an example, right? U.S. copper right now is right now about $5.30 a pound. It's the highest ever. The equivalent in London is about $4.50.
So
Wow.
Can we just Alix explain that for a second?
Yes, please.
Okay.
It's been a light bulb for me today.
Because I did Alix explain this to Paul in commercial
Yes,
break. But in
something.
fairness, he asked. So the COMEX price, which is the U.S. listed price, is by pound. And that's versus tons, which is in the London exchange. And there's 2,000 pounds per ton. So that's how you get the price discrepancy and kind of where we're at. You're welcome.
Mike, do you arbitrage that? Do you commodities people
Sure.
arbitrage that stuff?
Oh, yeah.
Oh, well, they're doing it now. Yeah, Alex is all. From a trader standpoint, that's what I look at. It's arbitrage. So I just take that London price, convert it to pounds, and you can see over time it's been the same spread forever. Since we have data since 1997 for that. And now it's 20% higher in the U.S. That's just never happened. So I think what that is, it's indicative of how profound these tariffs are. I mean, this is a shift in the global world order post-World War II, where the rest of the world was able to depend on exporting stuff to the U.S. That's changing. Now, copper is one of the things we do import. But look at things like crude oil. We have a surplus of crude oil. Crude oil's down. We have a surplus of grains, corn, soybeans, wheat. They're having pressure. Copper's at the forefront right now. I just look at it in the short term. This is a trader's trade. I look at it as a trader like, yeah, I might be structuring put strategies. I've been wrong so far, admitted. But you know what? In one tweet, it can drop 20% and just go right back to parity with what's trading in the rest of the world.
And is that how you think about valuation in this market, the copper market? Is it Chicago versus London, or is there another way to get a sense of valuation? Are we stretched?
Well, I love using that word in this case, Paul. What usually happens, if you can identify spikes in commodities and be on board, people are doing that in copper, you're doing fine. The point is, almost every time you get an aberration when a commodity spikes like this, it always go down. What's the most recent example? Eggs. I mean, they spike up for a little while, we find supply, cut off demand, and they go down. So it's just a question how far it goes. What's unique in this case is last year we could really see in futures driving that price higher. Managed money, hedge funds, futures positions were driving it higher. They got up to about 32% of total copper and open interest. Now they're 9 to 10%. They don't really care because I think they know what's happening. We're squeezing a few shorts. You just can't see how obnoxious it is. And at some point, I just don't know how it can stay up here, particularly if the U.S. stock market continues to trickle down, which is the base case from people like Gina Martin Adams.
So using these ARBs to trade, is nothing new. And we see a lot of these dislocations a lot, too, especially if you factor in Shanghai copper as well and, how you then store it and then playing it. Typically, when these distortions happen, how do they wind up resolving?
Well, usually it's some kind of futures. You have to move copper towards the U.S. How you get there into inventory is kind of complicated. Usually it's just a matter of how wide it goes before it goes back to disparity, back to parity. And the question is how it does that. And that's key things I'm looking forward to. What can make that happen? First of all, time. It's not going to last too long. It just markets will move to where prices will benefit. And then the key thing is you have to worry about if you're long U.S. copper, you have to worry about just the next social media tweet from a Trump administration official might say, yeah, we were going to do 25% tariffs. Maybe we're going to do 10 to 15% because the copper price is telling us we might be a bit extreme here. So there's a lot of nuances. But the thing is, the risk is you can turn around in one day and what's been up 30% this year can drop 30% or 20% in a heartbeat.
All right, so we've talked about tariffs and copper. Are there other commodities that you're paying attention to, Mike, as it relates to tariffs?
That's the main one. Steel is in there, but steel's kind of a bit out of my purview because it doesn't trade a lot in actively traded futures, but copper's the number one right now. But I like to point out the key thing that's really happening is because we're having this trade war, I guess trade war you could call it, it's the surplus commodities in the U.S. that are major under pressure, and that means crude oil, liquid fuels, natural gas, potentially at a peak around 4, and the grains. If we do have truce in Ukraine, Russia, grains are already in a bear market, it'll pressure them lower. They would have to depend on the U.S. drought to go up, in my view.
And gold, what do you think? Still going to rocket higher here?
No, see, that can still bullish. The way I see gold, it's reached a good threshold of $3,000 an ounce. It's pretty much overbought. It basically needs bull fuel, and that bull fuel, the top source of that would be the U.S. stock market going down, which we know is basically deflationary. Good for gold, but probably maybe tilt over and help U.S. long bonds.
All right, Mike, really appreciate you. Thank you so much. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist.